You are listening to Investing Matters, brought to you in association with London South East. This is the show that provides informative, educational and entertaining content from the world of investing. We do not give advice, so please do your own research.
Hello and welcome to this Investing Matters podcast. My name is Peter Higgins. You can find me at Conkers3 on Twitter. And today I have the huge privilege of speaking with Holly Mackay, entrepreneur, multiple award-winning founder and managing director of Boring Money. Holly has worked in finance for around 25 years, including corporate roles at Merrill Lynch, Aviva, Santander. And Holly is a financial expert, highly sought after, commentator, keynote speaker, independent investment expert across investment markets, and a champion for clear communication. Holly, thank you ever so much for joining me on this Investing Matters.
Thank you, Peter.
Today.
Yeah, no, I felt a bit like I was on This Is Your Life as you were reading that description out. It's not how my children would describe me, so it's nice to have nice things said about me, Peter. Thank you.
Oh, lots of nice things have been said about you. And it's the reason I'm speaking with you today, because lots of things have been said about you, and you've won awards for your work, so it's fantastic to have you here. Holly, I want to start this conversation, really. I want to go all the way back to the household you grew up in, because I want to build this picture, and I know it's going to resonate with so many people about the tenacity and the perseverance and determination that you had from a very, very early age to get you to where you are now. And the fact it hasn't all gone smoothly for you, and you're here absolutely thriving and doing so much good work. Okay, so can we start with that? The household you grew up in, your dad was an accountant, your mum ran her own business. Start from there.
Yeah, it's funny, you sort of look back. I mean, the first thing to say is, if you'd asked me as a kid, would I end up working in the world I work in today? Would I do anything to do with money or finance? It would have been absolutely not, Peter. I mean, I was in set 4 at one point for maths at school, which I was quite cross about. Didn't think it was fair, but there you go, there I was. But like you say, I mean, I think now looking back, my mum was an entrepreneur, but we didn't call them entrepreneurs in those days. She just ran a business. She ran a catering business. So kind of growing up at the weekends, I used to help her to get my pocket money. It was in the 70s. I remember cutting up lots of cheese cubes and putting glacé cherries, gherkins, making the coloured wheel. So that was my job. And yeah, my dad was an accountant, but clearly he didn't talk to us much about what he did for work, and we didn't talk about money very much as a household growing up. So I went off to uni, chose to read languages, so I didn't grow up kind of actively thinking a lot about money. But looking back, I guess I always did jobs. I had my mum who ran her own business to learn from. So I definitely think I was much more on the kind of commercial side of finance rather than the sort of theoretical side of finance. And that's probably still true today.
Excellent. But what I love about it was that you held down the Saturday job. It's like as a youngster, mum's trying to drag you into doing all these, making things for events and so on and so forth. You're going, oh, but you think, all right, I'm getting pocket money. So you invest in it. So you carry on doing it. And that seems to have worked for you, because you ended up earning a scholarship to secondary school.
I'd forgotten that, Peter. Yeah. Well, I think I remember in the family, and actually my parents, all credit to them, there was never any pressure. I remember just one day it was like, oh, do you want to have a crack at this, Holly? So I sort of did the tests. And yeah, gosh, I haven't thought about that for absolutely years. But I was quite swotty as a kid, Peter. I sort of fell off. It all went wrong a bit when I went to uni, and I became a bit of a wild child. But at school, I was quite swotty. I did work quite hard. I wanted to do well for myself. And I did have these jobs, after my mum sold her business. I worked for the local pub. A sign of inflation, I got £2 an hour, which felt like an all right deal at the time, in the kitchen there making sandwiches. So yeah, I always had paper rounds, Saturday jobs, sort of work for my mum, work for pubs, various places. So I have always enjoyed earning some money and being able to sort of spend it on things I wanted. I can't claim to have been a great saver as a teenager. I'd like to paint that picture, but it wouldn't be true. I kind of got my money, got it in my hot little hand, and went out and bought stuff.
So the stuff you bought as a child, was that music? Was that clothing? What were you just with the money with?
Mostly it's sort of the odd, God, I sound really old now, LP. So I'd go to sort of, not WH Smith, Woolworths, that was it, Pick a Mix, Rah skirts, Peter, if you know what they were, LPs, those sorts of things. So yeah, I liked fashion, I liked music, I liked all the sort of typical teenage stuff. But yeah, wasn't a great saver, I have to say.
Okie dokie. So did things change when you gained your place at Oxford Uni, of all places, from Somerset to Oxford Uni? That must have been a big game changer, meeting all these different people who I suspect many were very wealthy, you know?
Yeah, I definitely, looking back now, I'm really pleased and grateful I went to Oxford because of the people I met when I was there, who many of whom I'm still friends with today, and they're really amazingly interesting bunch of people doing interesting things today. But I didn't really enjoy it when I was there because I felt like such a fish out of water. I mean, I remember getting there in this college and looking around, and I was quite young. I'd only literally that week turned 18. And it just seemed to me that everyone else was much more confident. They'd all had gap years in Thailand or whatever and done all this exotic stuff. There was a gang of people who'd been to the posh schools in London. So I definitely sort of felt like a bit of a second-class citizen when I went there in a way I hadn't before. And I'm not sure I ever got over that, Peter, when I was there. It was a very daunting place to be. And of course, looking back now, I suspect pretty much every other 18-year-old there felt the same as I did. But when you're 18 at the time, you just assume everyone else is amazingly competent and confident, and you're the only one struggling. But I did, you know, I partied quite hard. I didn't work so hard in my first year. I failed my prelim exams. And that was a real wake-up call for me. And that, for me, I think suddenly made me think, oh my God, because I'd not failed exams before. And I suddenly went, what the hell is going on? Come on, Mackay, get a grip. So I worked really hard that summer and kind of got back onto a sort of more even footing. But I do remember and very strongly feeling quite inadequate there, and like everyone else was a bit smarter, richer, more confident than I was, which of course wasn't the case, but it felt like that when I was 18.
It does. I mean, this is the beauty of reflecting, isn't it? You know, we look back and we see things completely different now, but it's all part of our growth. It's all part of our path and journey.
And I think as well, it does give you a sort of empathy. We'll move on and talk about what I do now, but I like helping people with understanding things. I think I'm quite sensitive at spotting when someone feels uncomfortable or a bit inadequate. And of course, that's what finance does to most people. If you talk to anyone about money, they'll very quickly get into a narrative, most people, of saying, oh, but it's probably just me, or I don't understand that, or I'm not rich enough. Or so I guess maybe talking to you, looking back, you know, perhaps there's some of the seeds there were sown of the empathy, which I hope I bring to the work I do today, because I know what it's like to sit somewhere nodding politely, but underneath going, oh my God, I'm lost.
Absolutely, absolutely. Now, I love the fact you touched on the fact that you had quite a difficult first year, and you've, you know, failed some aspects of the coursework, and that was your wake-up call for you. But you went on to attain your degree in modern languages at Oxford University. What were your plans then? You know, did you have a vocation or a sight set on doing something?
Absolutely,
you know, having got the degree?
No. I wanted to go traveling, and in a way, you know, that's why I did languages, because I find people so interesting, and I like talking to people. I like different cultures. I like different languages. I like different places. So I wanted to go to South America, but none of my mates were in a position to go traveling. They either didn't want to, or they had jobs lined up, or it wasn't their thing. So I went to Australia instead as a sort of warm-up act, because it was quite far away, but not as scary as South America. So definitely didn't know what I wanted to do. I didn't have a vocation at all. And that's typical, I think, of someone with a languages degree. And And I did a thesis in medieval French, for God's sakes. I mean, what that sets you up to do in life, I'm not quite sure.
In Australia, yes.
Pretty niche, right? So no, I wanted to go traveling, and that's what I set out to do pretty quickly after leaving uni.
So you're backpacking, you're in Australia, and then you, for some other reason other than, languages maybe, you get into media work. So explain that transition for me. Was it a case of you as a backpacker, you've got very little money, you take on whatever jobs you can?
Well, I did my years backpacking, and then a week before I was due to come back to the UK, I went to my leaving party with a friend of mine and met a guy, and then obviously sort of fell head over heels in love and stayed out in Australia. And then when I was there, I was like, right, what am I going to do? And I really wanted to make documentaries, again, back to that interest in people, understanding them, what makes them tick. So I set out sort of to try and start working in TV. And the sad reality was, Peter, in Australia, there's no money in telly. I mean, literally no. They buy a lot of stuff in from America, from HBO at the times. They make the odd, quite bad sketch comedy show. Sorry, Aussies, but it's true. And there's quite a lot of sport. So I set out in that world to make, groundbreaking sort of human interest documentaries. Had to learn my trade. And it took me a sort of fair while of realizing, after sort of years of being a production assistant on aforementioned pretty bad shows, that I just wasn't going to get the break that I wanted, because there's just not the money in the industry out there to do it.
So what then transpired then? Because you became then laser focused on a change of path and a move into what essentially was finance then, was it not?
As I'm telling the story now, what talk about if someone charted this on a graph, it would be the most wiggly line to finance. So in Australia, sort of, gosh, when I tell my kids this, they can't believe it. The only way really I communicated with my family was we'd have the weekly, very expensive phone call, and there was the old fax. Weren't really emailing then, and certainly not WhatsApping or anything like that. And so we used to have these hour-long calls, and I'd have a lot to chat to my mum about. But it was harder communicating with my dad. I love my dad to pieces, but he's a retired sottish accountant, and he's not the most emotionally sort of forthcoming. And when you're a 20-year-old woman and you're on the phone with your dad like that, you're kind of going, well, what do we talk about? And he'd always talk to me about the stock market. And he'd made loads of money on, now we can't remember to this day, we still talk about it. It was either Uruguayan copper or Filipino nickel, or possibly Filipino copper. I can't remember, something like that. And he was talking to them, this money that he'd sort of made. And I kind of remember thinking, I want a piece of the action. So I went and did some research, and I bought, again, I can't remember if it was Uruguayan copper or Filipino nickel or something. And I tried to beat him and I didn't. But that became a bond for us, and it became something we both really enjoyed. And we'd have these little wagers, and it became our thing. And that's what we talk about and really sort of connect over. And so I started to test the waters, and start to dabble with these investments. I mean, one of my first investments was call warrants. I can't believe it now. I bought Telstra call warrants for about 21 cents. And luckily, I remember selling them about 3 days later for 24 cents, but I had loads of these things. So I made loads of money. So I was one of I'll talk about my failures in a minute, Peter, but I was cock-a-hoop. I thought I was the world's best investor. This was easy, wasn't it fun? But this is how I connected and sort of really talked with my dad. So I guess I got the bug, and I got the bug by having skin in the game. And very luckily for me, the first few dabbles, I did quite well on. There is a but that comes later. But that, you know, and it was that connection. So it's really my dad I have to thank or blame for me getting into the finance industry. But I loved it. It's looking at that little ticker, and still today, you know, when you look at it, there's so much more there than just numbers or graphs. I sort of go into sometimes the London Stock Exchange, and you look at the board and all these flashing lights and numbers moving. And you know, behind those numbers, there are millions of people all over the world, kind of with hopes and with aspirations, or being greedy or being scared. And so for me, it's that sort of, that's what I love about it. It's the sort of human story behind it. So maybe, Peter, if you look at it in that way, it's not such a sort of step so far removed from the documentaries. I was interested in that human nature part of it.
Absolutely, human nature. You know, it's the psychology of the markets, really, what you're seeing on the boards. It's beyond numbers, isn't it?
It's fascinating.
So much more to it.
I always think, I did a sort of piece, I wrote a piece on this once. If you asked people to imagine the stock market as a human character, so imagine there's some weird Tim Burton film or something, and someone has to play the role of the stock market, most people would say, oh, I think I would envisage that as a sort of older man in a suit, possibly with slightly greying hair. When I think about the stock market, it would be a pantomime dame shrieking all over the place, drama queen, wouldn't it? Sort of going, oh, hi, everyone, or oh, the oil price is down, sell. You know, I love it, because actually I think it's much more about psychology and very basic human instincts than it is anything to do with charts and mathematics.
Absolutely, the fear and greed of the markets is immense, and it impacts so many parts and aspects of our lives. It's just staggering, you know, and even more so now with our politicians getting into the space even more so on a daily basis. But we'll get onto that in a bit later on, Holly. We're going to touch on that a bit later on. I want to start now and talk about that journey in finance. 1999, 2000, Merrill Lynch, maybe not so glamorous as many people might have thought. And tell us some details about that, the first roles and the tasks that you were asked to do, please, Holly.
Oh, it was awful, because the one thing, and it makes a lot of sense, but in Australia, they're very vocational. So if you want to work in finance, you aspire to go to Monash University or Melbourne University to read economics. So this concept that some kid who'd worked in telly, who'd done medieval French, could just sort of rather confidently write someone like Merrill Lynch a letter and go, I'm going to be a fabulous asset to your organization. No, they weren't buying it at all. So my first job, I am determined and I am stubborn. So I was like, right, I'll show you. But my first job was at the then Solomon Smith Barney, asset management, then turned into Citigroup, now don't exist anymore. Oh, it was awful. I was in the accounting and tax group, and I had to do unit pricing, Peter, for the fund managers. And I basically had a big Excel spreadsheet, and I had to go and pick up faxes off various machines and enter, I don't know, the data from cell H23 into another sort of cell somewhere. And it was, you know, I earned $15 an hour, sort of temporal, but built my way up from there. But I'm not a natural member of an accounting and tax group team, Peter. It was pretty soul destroying, but you know, needs must. And then after sort of 9 months, I got a job working for AXA Australia at the time. And then for me, the big break came because when I was at AXA, I looked after the Merrill Lynch kind of customer base. We had a sort of joint venture with them, and they ended up hiring me. And that's when I got to meet the team there, some brilliant people, really smart people. I love working there, and sort of started to learn about asset management. And that was the start, really, of finding my feet and actually doing a job I found interesting. But it was a bit of a hard slog to get there. Yeah.
Brilliant. I love that. I love that story. I love the fact that you just navigated all the little riptides or, waves that came your way and then made it to Merrill Lynch. But within that, you also had to then, you touched on it, had to go away and apply yourself and get a graduate diploma in applied finance. Is that right?
Yeah.
Because you needed to do that in order to do that work. Am I right in saying that?
Yeah, but also I wanted to understand it. I wanted to, just get the grounding, because I guess I'd done all the sort of donkey work, sitting there putting numbers in spreadsheets. And it was very boring, but once a day I'd go to the fund manager with the unit price I'd worked out. God help the investors, hope it was right.
Yes.
And I'd ask them questions about what they were doing. And so I had a 5 or 10 minute slot every day. There was this chap who ran the fund, and he was really nice to me, and we'd have a wee chat. So I wanted to understand it better. So that's part of sort of signing up for the course. But it was all very logical. And so I sort of specialised, took the main sort of courses in asset management. And so it joined the dots for me, because I'd sort of been in this world, but operating at the periphery, certainly not glamorous roles, but it started to sort of all make sense. So I quite enjoyed doing that course. I enjoyed every module, Peter, with the exception of the technical analysis module, which to me still these days is something I just don't understand. Drawing all these funny pictures and patterns on charts and thinking you can predict what's going to happen. Yeah, I could argue the toss for hours with people about it, but I remain a healthy skeptic about that, I think. But every other module I really loved.
Fair enough. So after that time at Merrill Lynch, what came after that, Holly, for you?
Heartbreak, Peter. So this is where the story then brings me back to England. So after 7 years of aforementioned chap that I sort of met in Australia, that sort of blew up rather spectacularly. And I wanted to come home. I was extremely homesick, had been extremely homesick for a long time. So very quickly, sort of within 6 weeks, really, I was back in the UK. And so started out sort of back in the UK. Gosh, I remember it, sort of landing at Heathrow Airport at 5 a.m, age 30, with no job, no boyfriend, no belongings, because they were all in Australia. And my lovely mum and dad came to pick me up from the airport. And I remember feeling like such a loser. Because I was like, I'm 30 and oh my God. So it was a pretty sort of brutal readjustment. But I was so pleased to be home, Peter. It's very hard living on the other side of the world. You miss out on all those little family trips, the sort of birthdays, your friends' weddings. I'd been very, very homesick. So despite all of the sort of, literally landing back in the city of London and knowing no one at all in the financial space, I was thrilled to be home again.
So that's around late 2003, mid 2003, maybe?
Yeah, that's right. That's right.
So you're starting effectively from scratch, really?
It
Taking up consultancy roles and work.
It did feel like that. I was sort of like, goodness me, sort of starting from scratch. And it's sort of, at a time when other sort of friends of mine were getting married or they were getting more senior roles. So again, it was a bit of a sort of kick in the guts. But I had one thing that was sheer bloody luck. And that is, because of compulsory retirement savings in Oz, they'd use these things called investment platforms, which is what I'd worked on over there, that were only just starting to sort of come to the fore in the UK. So for anyone who's been investing for since 2003, they might remember when Fidelity, they were one of the first groups to open up a sort of investment platform for DIY investors. And luckily for me, that was my thing. That was my subject matter expertise. And for once in my life, right place, right time, landed back in the UK when everyone was going, oh God, what are these investment platform things? Someone go out to Australia and investigate them. And I was like, I know about them.
I'll be here.
Yeah.
Fab. Oh, wow, amazing. So how did that develop then? Because obviously you're doing these different roles. You end up at Abbey National Santander in 2005. So that must have been you doing a lot of work then, and now seen as being an expert in this particular niche where nobody else
Yeah.
was.
Well, it was like I say, it was right place, right time. And one thing that I started to do then as well is talk to the media, which I'd never done before, had no media training or anything, but I used to quite enjoy talking to journalists. And of course, it was hilarious. I'd never worked at a bank before, and banks get very, very nervous when people talk to the press. So they want, I don't know if you've ever experienced this, but you sort of try and have a conversation with someone, you turn up and there's about 3 minders in the background and people will want pre-rehearsed questions and scripts and everything. And that wasn't really my style. So the journalists loved talking to me. And it took, I think, the then Abbey National a while to sort of work out who's this new woman that keeps talking to the press. But that was a first for me, and I really loved that. And yes, I would speak at conferences, would go out and talk to people, and so rapidly built my network. And also, you know, looking back, it was really social back in those times. When I look now at younger people that work for me, they don't go out like we used to. We were out kind of 2 or 3 nights a week. We'd sort of go out and meet people for drinks. It was a really good time in the City of London. It was very social. And because I'd just come back from Australia and was single, I didn't have any kids either, Peter. So I could go out and kind of mingle and get to meet people. So it was quite a whirlwind time. It was a busy time. But I loved it. I met a lot of good people in this industry. And I think to this day, those connections, you know, having that network is so crucial, I think, in the industry you operate in. And that network of people that you like, you trust, you sort of grow up with, you see them get promoted, they see you sort of do better. And it's really lovely. I value that a lot. Yes, but for me, that was definitely quite a happy time of finding my feet and going, I'm now on this path after sort of years of various setbacks. I'm enjoying what I do. I know quite a lot about it, and I'm good at talking to people about it.
Yeah, I mean, you're clearly very good at what you did, because then you decided, you know what, I'm ready now to do something for myself, you know, and then you went on to set up the platform, if that's the right pronunciation.
Yeah,
So
it
2008, you decided to go, it's my time now. I'm going to develop something that I believe in.
Yeah, and I think, you know, that was the time when Santander acquired Abbey, and I didn't enjoy the environment. I won't say too much about it, but it wasn't a great environment for me to be in. So sort of post-acquisition by Santander, I didn't have a very good time. I'll just leave it at that.
That's
And I
fine.
just remember one point just going, do you know what? Stuff this hierarchy and stuff all these, you know, the performance management. That's not my bag, you know, and all the hoops you had to jump through and the politics and the God knows what. And I just had a gutful. So I was like, right. And I didn't even really know when I was setting up platform. I didn't have the big master plan, Peter. I just thought, I'm going to do some consulting and I'm going to write. So I started to write a weekly blog. It wasn't called a blog in those days. It was just an email I sent once a week to people. But I was quite cheeky in how I wrote it. And it was very different, I think, to what was out there at the time. And I wrote about our space in the investment industry. And it was aimed at financial advisors and practitioners. So it was a sort of B2B publication. And it just did really well. People liked it. I think it was a different way of writing about this industry. Most other stuff out there then was pretty stuffy and staid and frankly really boring. So I just injected a bit of hopefully personality and sort of humour into it. But I wrote my way and I did it in my style. And it all kind of grew from there. You know, people started to read it, they'd recommend it to their friends. So I sort of built this audience of people and sort of built the business off the back of that.
So your Oxford degree came to some use then. You know, modern languages and literature came to the fore.
Or possibly. I mean, yeah, definitely the storytelling and the enjoyment of that. And but being able to do it in my way. I'm not sure the sort of Oxford part of it. I don't think I write today, like, I'm not very academic, I would say. I'm much more street smart, Peter. So I don't think I write like, I'm certainly not a great intellectual, but I like writing a good story.
No, that's brilliant, and independent thinking as well, which is brilliant. Now I want to talk about the first bit here of the platform and your first event, because if I'm right in my research is correct, had you just had your first child then?
It was
because I'm just thinking you're pregnant when you go, I'm going to come up with this new idea, and then your first event, you think your child had been born a couple of weeks. I'm thinking,
it was literally
wow, other people and your parents must have been going, Holly.
My mum was like, my mum was so just like, what the hell are you doing? I remember, well, I just thought it was fine, you know, because when you don't have babies, you sort of think, oh, they sleep all the time and they'll just sort of sit in a corner somewhere. And of course, you don't realise that you won't have slept for 2 weeks and blah, blah, blah. And so we had this conference. And I remember just going, oh, well, we'll do it 2 weeks after my due date. That'll be fine. And so mum and dad were booked to come and sit in the green room. We had it at the QE2 Centre as well, opposite the Houses of Parliament. So it wasn't a small little venue either. And so the green room, which is normally for the speakers, and that was bomb-proof and soundproof because it's where a lot of the politicians would sort of have their conferences. So none of that for any of our speakers. They just had to go and sort of look after themselves. The bomb-proof, soundproof green room was for my 2-week-old son and my parents. And I remember turning up that morning. I got out of the black cab outside with my bugaboo. Oh my God, what a rip-off. And my 2-week-old son inside. And the security guards didn't know what to do. And I sort of walked up and I didn't fit through the sort of metal detector thing. And they were like, who are you? And I said, oh, I'm the chair of today's conference. And the look they gave me, it was so funny. They were like, okay, scary lady, get out of the way, come in.
Fantastic. Now, clearly you went from strength to strength, Ollie, with the platform. It grew rapidly. It created an appeal, and it had some sort of zeitgeist because it just went like that and grew and grew and grew. And then you receive, almost 3 years later, an unexpected phone call. Do you want to share that story and what happened there?
Yeah. So I was walking along, I remember the south bank of the River Thames, going to see a client, not my favourite client, be a room full of kind of people who didn't want to make decisions. So trundle along I go, and the phone goes, and it's someone on the other end of the phone from Centaur Media, who are a B2B publisher. And very quickly they sort of said, well, look, we're very interested in your business and what you do. And they started to talk about the potential for an acquisition. And I remember sort of the person I was talking to sort of said, so this is how it would work. Let's say, for example, we agreed to give you X. And they named this, for me, astronomically large figure. And I remember absolutely, you know, when you have those moments and it's almost like everything around you goes into slow-mo and you're going, and this little voice goes, stay cool, don't blow it. Don't sound excited. Just pretend like this is just like speaking to boys on the phone. You're going, yeah, whatever. I'll think about it. I remember hanging up and sitting down literally on this wall on the side of the River Thames. And I won't tell you the precise words going through my head, but I was like, holy moly, because it just had never occurred to me. being an entrepreneur, again, wasn't a thing then. It wasn't a name. I just sort of set up this business and did something I'd loved, and I'd grown a following. And yes, we were making better revenues, but I wasn't tapped into that entrepreneur. Now I think everyone that sets up a business is super aligned to the world of sort of VCs, PEs, sort of crowdfunding, valuations. It wasn't like that then. So yeah, I mean, that phone call, yeah, I remember it, that feeling in my stomach of like, oh God, but not being able to show that. I had to be cool, Peter.
Well, this is it. I mean, the fantastic thing is that, you know, you've had that journey, you've had the highs, the lows, the production side, media side, not going quite where it wanted to go, having to come back at 30, feeling a bit, you know, your words, bit of a loser, you know, coming back to your parents. And
Yeah,
then you set up your own business, and in 3 years, someone's giving you a phone call saying, we want to buy your firm for this, you know,
yeah,
significant amount of money. So game-changing amount of money. But they tie you in as well. You've got to do a
yeah,
3-year
yeah,
earnout, so you're still
yeah.
there within the firm.
I did, yeah, that 3-year earnout. And I have to say they were really good acquirers. And I think, you know, the deal made sense when they talked to me about it. It was a really good combination. Sometimes you think about firms acquiring others and you think, well, I'm not quite sure why they're doing that. It doesn't seem to make sense. This was a very logical deal. It sort of worked very well. And I was very grateful to them, actually, because they gave me a good space to grow the business within, but they really left me to get on with it. So I had a good time doing that 3-year earnout, actually. No sort of horror stories to report, hit the sort of targets at the end of the 3 years. And it was a hugely positive experience. And I sort of felt like, you know, I left on a bit of a high. And something that gives me pride today is that business is still going, still operating, still sort of doing a lot of good work in the sector. And that's really nice to see.
Brilliant, brilliant. Now, we're in 2015 now. You set up the award-winning platform, Boring Money. And I think it might go back to the early days when you were doing boring tasks. Is that where the title came from for the name of the platform?
Boring Money. So this was, I really now wanted to do something to talk to, not to a B2B audience, but to talk to the person on the street, right? And just tackle this problem that finance is such a key part of all of our lives. It's an enabler. It brings us choices. It can bring us happiness. It brings us peace of mind. All of these really key things, and yet it's so poorly understood, and people feel so disempowered about it. And I knew I wanted to do something, but I didn't want to do just the same old. I hate it when the industry just bangs on about wanting to educate people, and they all make it the consumer's fault and listen more and read more. And I've always thought, no, it's on us, the industry. Explain it better. It's not customers' fault. They find us, you know, baffling and confusing. So I wanted to do something that felt very different. And I did a little bit of a fossick around looking at what there was. And everything out there was so earnest, Peter. All of the names that people call things about money, they were all very, very earnest and everything, but all just a little bit, I don't know, they didn't have any edge. And I remember running through Hampstead Heath. That was where I used to live near, and I used to go for my runs there. I was going, why do people call it that? Because if they were honest, what most people think about money is boring money. And then that made me laugh, because it's quite, I like cocking a snooker sort of authority. And I thought that was quite funny and cheeky. And then I remembered also that George Soros had written, and I think this is absolutely wise and spot on. Good investing should be boring. If you're enjoying it, you're probably not very good at it. I think it might have been a bit softer than that. So there's a bit of a sort of boring money's doing two things. One is it's acknowledging with people and almost sort of saying it's okay to think this stuff's boring because most of it is really boring. We'll help you try and navigate that. But also there is a bit of a sort of theme there, sort of trying to say to people, yeah, be careful of getting a bit too cock-a-hoop and interested and a bit too thematic and a bit too tradey, because it'll probably go a bit wrong if you do.
Absolutely. No, that's a great quote from George Soros as well. Now, could you give us an overview of Boring Money, the platform, all the different services as well, including the conferences and some of the courses you put on as well, please, Holly?
Yeah. So we have what we're trying to do is to help people make better choices. So for consumers who come to our site, last year we had about 1 million people on the site. The majority of them are coming to us for help to pick an ISA or to pick a pension or to pick a fund. So they're coming to us for help in making some of the financial choices that they're making out there. So really what the sort of site does, it's a bit like the sort of financial love child of TripAdvisor and Which. So the TripAdvisor bit is we've got, I think, nearly sort of 10,000 investor reviews at the moment of various providers on the site. That's important to people because there's so little trust in financial services out there. I can always say to people, look, if you don't trust us guys, you can take our view out of it and just read what thousands of other investors have got to say about this. And then the which element of it, I guess, is we've got a research team and an analyst team in-house who are sort of putting all the providers through their paces. So, you know, I've got, I think it's about 30 test accounts with various investment platforms and providers, because it's amazing how different some of them look once you're a customer and you're off that flashy, nice looking sort of website. When you're actually sort of in the proposition under the bonnet, it's quite often a different experience. So I think to be able to write about it well, to be able to talk about it, to be able to help people, it's a big deal. You know, people trust us, I hope, to help them make better choices. So I think we need to know what we're talking about, and the way to do that is to, you know, walk a mile in their shoes, to have these test accounts. So the main sort of tenet, Peter, of what we're doing is to help people make better choices. The other side of the business we have is we do research and analysis for people in the industry, because we understand consumers so well, because we see what people are reading, what they're clicking on, what they're reviewing, what they like. We provide the voice of the customer to the industry. And so we help the industry with research to understand their customers better and to gently nudge them to make tweaks, to make changes, to change their pricing, to change their documents, whatever it might be, so that they're delivering better products and services to their customers.
Indeed, I often see you quoted, Holly, various different media outlets and also on various programs regarding the research that your team has done. So that's absolutely fantastic. I wanted to touch maybe just quickly on that you have a research panel as well, where you have investors and savers are part of that panel. How would one become a member of one of your panels, maybe to share their insights as the panels they've used?
Well, please, for people sort of do join us, and we pay people on that panel sort of market research rate. So, you know, it can be a nice side hustle for people. That's really key to us, sort of, Peter, because we do a lot of work with providers. And actually, what's increasingly interesting to providers, particularly fund managers, is we're able to tell them, because of this panel of investors we have, what their customers really think of them. Why did someone buy your fund? What were they hoping it to do? Are they pleased with it? Do they think you're doing well in terms of, I don't know, sustainability or value or performance, whatever it might be? Do they understand your fact sheet? So there's a range of different things we can do. But that is a sort of key growth ambition for the business, is that as we grow our community of people who come to us for information and insights, we're also growing, we call them the Boring Money Army, I love them, and there's this group of people that we can reach out and say, hey, we've got this project for whoever it might be, and some of the more involved projects, you know, people can earn a couple of £100 from sort of helping us with that. So if people want to check out the Boring Money Army, it's a key part of what we're building. And it's really our way of aggregating providers, customers, and holding a mirror up to them and saying, guys, this is what people are saying about you. So when you're planning your improvements, your changes, there's the voice of the customer.
Absolutely, and it's been going phenomenally well, Holly. I wanted to touch now on the corporate side because obviously there's lots of different entities across the investment industry that tap into the very research that you do. And you mentioned your research team and your analyst teams. You've got some very, very skilled individuals working for you.
And I think that the research is we're trying to help positive change. And for example, I launched a report this morning on pensions, looking at that. And, you know, a quarter of people who earn 70 grand a year or more don't have a private pension. Now, when I take a sort of stat like that and I look at it and I look at the increasing tax burden on everyone, and the fact that pensions are one of the last legit gains in town to sort of bring that down, there's so much we can do with that stat, sort of, Peter. So we can go to the industry and say, guys, you're missing that. That's 3/4 of people who earn over this aren't your customers. Why not? You've got to do more to tell them about the benefits of these pensions rather than, you know, so that's something we can do with that fact. But it enables us also to go out on our site to sort of people and make sure we're addressing that audience of people, for example, and breaking it down and being really clear with people, not just, oh, guys, here's another problem, but the important bit after that, and here's some things you can do about it. So for me, what's so great, what I love about working at Boring Money is when you sort of sit in between the industry and people that buy these products, and you can use information, you collect information and insights from your community, from your users, you use that to help the industry understand them and make better products. But you can also use those insights to help you make sure you're talking to your readers about the things that really matter to them and about the things they should be focusing on that will make a material difference to their wealth, and trying to do that in a really targeted way, Peter. So not just going, oh, and here's another thing, and here's another thing, and oh, you're rubbish, and no one does this, but sort of going and saying, right, because we know this about you, we think here are 3 things you should focus on this year, and making it feel accessible rather than overwhelming.
What I love about what you just said there, Holly, it's just clear to me how passionate you are about this. And it's clear that the industry has recognized that as well, because you are one of the voices that they go to when they want some deep research done and quality of work done. And I love the fact that that was recognized last year for you and your team when you won Investment Woman of the Year for small to medium firms at the Investment Week's Women in Investment Awards 2022. So tell us what that meant for you and your team, because you know you're doing all this hard work. It's recognized but not recognized, but surely then it's like you've got the plaudits now. You've been awarded, you know, with that accolade.
I'm awful at winning awards, Peter, because I'm the sort of archetype, I don't know, I tend to sort of go, oh, it was nothing, and then sort of go back to work the next day and go, right, what's the next thing that's broken that I've got to fix? So I'm not really sort of prone to going home and pouring myself a glass of champers and patting myself on the head and saying, well done me. It is, though, there's loads of things I thought about that award. One was just bloody hell, wow, right? Because you run at 100 miles an hour and you don't really expect these things. So it was a really nice accolade. And as you say, for the team as well, you know, there's 25 people with me at Boring Money who work bloody hard. So kudos to them. I'm in 2 minds when I get that about that award. Part of me wishes we didn't have the need to have Investment Woman of the Year award. So, you know, in a way, these awards' success will be their demise. There's a little ferocious sort of part of me that just wants to be Investment Person of the Year or not at all.
Absolutely.
And I don't need that to sound ungrateful, or I acknowledge what they're doing and the changes it's helping to create, but I do have that little voice inside. I don't know, Peter. I'm not very good at taking compliments, so I don't dwell on those things very much, because I guess I have that inner voice that's always driven to do the next thing. And there'll probably be people listening to this who do all sorts of well-being and mental health who'll be going, "Oh no, Holly, you're going to burn out," and everything. But it's just not my modus operandi. I don't tend to sit down ever and sort of go, "Oh, well done, wasn't that brilliant?" There's always something ahead to think about and to work towards. So I'm not very good at you can tell now because I'm blustering a bit.
I can tell.
Taking
But the
compliments.
beauty of it is, Ollie, is that just prior to you going to that very event, you chose a particular eau de parfum to wear. Do you remember what that was by Tom Ford? You can say the
Am I
name if you
allowed to
want
say
to.
it? Am I allowed to say it on your
Go for it.
podcast? This is what a lovely woman I work with, who's one of my kindest supporters, and I went out for lunch with her. She also runs a small business, a lot bigger than mine, actually. And it was her little present to me, and it's called Fucking Fabulous. And it actually smells really nice. And so I put that on. Gosh, I'm embarrassed that you saw that. The funniest thing about that as well, Peter, is that my 13-year-old daughter now goes into my bathroom the whole time and tries to nick any expensive stuff. I don't have much. I'm not really into makeup and all that stuff. And she knows I've got this perfume. And so she knows she can say it to me, to my face. And because she's saying something's name, I'm not allowed to tell her off. So she loves every chance she gets coming in and talking to me, preferably if her friends are in the room, about my perfume.
Brilliant, brilliant. Now I'm going to try and bring it back to the core of what we're talking about now, Holly. Pensions. It's got a massive issue here. I saw you having a little josh with Mary Somerset Webb recently, where the question was, does everything in the UK come back to pensions in the end? How do we ensure the best outcomes regarding planning and saving for financial retirement? What should be the best way of going about it, Holly?
Oh God, we've just got to be realistic with people, Peter. So it comes down to, I think, is having the right conversation with people at the right time. There is no point in talking to people in their 20s earnestly about how much they should be putting into a pension, because they just won't do it. Okay. What maybe the conversation to have with them is saying, the best thing I can do for you if you're in your 20s is just get you to open one up and put a tenner in. And then the purists will all go, "Oh, but £10 isn't enough because compounding now and blah, blah, blah." Forget all that. If we can just get them to open one up and put a tenner in and just spend a year just experiencing it and what it's like, then in my book, that's a success. When we look at people 45 to 54, what do we know? People in this age bracket are incredibly time poor. They're juggling, they're doing a million things. So it's got to be really clear, succinct, action-based tasks. And too many people still don't get the key sexy thing about a pension, Peter, which is tax relief. But that sounds really boring. But actually, if you say to someone, "Do you want to know how you could, with no risk, turn £800 into £1,000 tomorrow, and it will take you 10 minutes, then they're like, "Oh, yeah, maybe." And then, oh, by the way, if you're a higher rate taxpayer, you can also reduce your tax bill, when you come to put in your tax return, by another £200. So I think it's just, rather than going out and going pensions and sending the same message to everybody and talking about tax relief. I mean, who wants to open an email that bangs on about that? It's about making it relevant, and it's about kind of not bombarding people or overwhelming them, and just saying, here's one thing, guys, that actually probably does feel achievable. It's just little steps, isn't it? It's like every January, Peter, the first thing I do that makes me feel better is I buy some new gym kit. It's the first step to getting back into the gym. But it kind of works, right? You just have to take that first step.
Fantastic. I love that. Getting a gym kit every January. Fantastic. Now you're very passionate about financial education, Holly. And I saw one of the tweets on your profile saying that from one of your boring money readers, "I'm old enough to know better, but I'm not old enough to know what to do." And that reader said their age was at the time was at 45. 45 years of age. What would you do regarding the financial educational curriculum? What would you add in there to ensure that somebody who's now 15 doesn't get to 45 and not know what to do?
Yeah, not make maths compulsory. Back to my earlier comments, sort of, Peter.
Okay, yeah.
Kids are commercial. Kids understand money, and they are interested in it. Now my kids have become, probably because in a way they've been forced to, but they know a little bit about investing, and I've set up junior ISAs for them. And the way that I got them interested in it, because you imagine when I started, they were like, oh God, it's mummy. It was like when I was, they were little and I'd be on Sky TV or on BBC News, and they wouldn't turn over from whatever they were watching to watch me. So, oh, boring mummy stuff. But then I remember saying to my son, did you know in this fund I've bought for you, I explained what a fund was, you own a bit of Apple and you own a bit of Samsung. And in one fund, you own a bit of Nintendo because he's got a Switch and he loves The Legends of Zelda, right? And it was so funny. I showed him this fact sheet. So I sort of went, well, here's the fund bit. And this fund's got 7% in Apple. And he looked at me and he went, oh, very sweetly. He said, so do I own 7% of Apple? I was like, oh, darling, oh, God, I wish. I said, no, if Apple were a person, you'd probably own a millionth of one bacteria on one of their eyelashes. But it's fine because you own a bit of Apple. So I would bring it alive with kids. There's no point in doing too much of the theory, is there? But it's explaining that essence of investing. It gets them into it. And things like eBay is great. My 13-year-old daughter's practically eBaying the entire contents of our house at the moment because she's sort of worked out, and she loves all the negotiations and the counter bids and the offers. And so children are commercial. I think the problem is there's a lot of financial education programs being done, but they're not being done by the right people. They're being done by the finance companies, and they don't make stuff that young kids want to do. It's that simple.
Indeed, that is the case. And we saw not only just young people, but young adults and adults per se. There was a surge of DIY investing during lockdown 2020 to 2021. What have you found since that period, Holly, regarding the assets or interests of those investors? Because we saw a lot of people going into Bitcoin, didn't understand it. So a lot of people going into small caps, didn't understand it. How has that moved on since 2020 lockdown, do you think?
Definitely things have calmed down. So if we look at the new kind of DIY investors coming into the market, that slowed down in 2022 and it's slowed down again in 2023. So that sort of spike of interest that we had has calmed down. The thing I think is quite sad about what we saw during lockdown is we know that for some people, if they get burnt on their first experience of investing, they'll never invest again. So I do think there are a number of people that we've just lost that went too big on thematic investing, that went too big on a few sort of tech stocks, meme stocks or crypto, whatever it might be. So a lot of people got horribly burnt then because of the age-old mistakes we've all made, right? Lack of diversification, chasing stuff, getting greedy, blah, blah, blah. Not remembering George Soros going, good investment should be boring. So, we've seen it's calmed down. There are fewer new people coming to the market, new investors. But there are a lot of burnt investors from the sort of lockdown years, also fueled, though, of course, by just the strong performance of US tech stocks. And those are always more appealing stocks for investors. We like brands we've heard of. We like brands that we like using. But there are quite a lot of victims who lost, a fair chunk of money they couldn't afford to lose as a result.
Absolutely. I love the fact that you touched on earlier about the educating of young people, but I think it could also be utilized the same skills with educating all adults, to say, look, if you invest in this fund, you've got a slice of Apple, you've got a slice
Yeah.
of Nintendo. I think that's where we need to go back to ensure that the platforms utilize, the research that you use and educate people of all ages.
And it's bringing it to life, and we've seen that to some
Absolutely.
degree. That's what made sustainable investing, until everyone got worried about greenwashing. That's another thing. But sort of back in 2021, there was a spike in interest there, because it's easier, I think, with sustainable investing to make the connection with the tangible thing you're investing in, than it is with other sort of forms of investing. So, but I definitely agree with you. And even when you look at workplace pensions, 1 in 5 people don't know that the money in their workplace pension is even invested in the stock market. And then many more people sort of haven't got a clue what it's invested in. So just imagine if we pulled out a few key brands or stocks that they may have heard of, that they might find interesting, and go, hey, you, guess what? You own a bit of that. And I think when you've got that skin in the game, everything becomes more interesting, doesn't it? Because you've got that kind of, there's a reason Dragon's Den and The Apprentice and all these shows are on primetime telly. We're commercial, we love it, we're nosy, we want to own a bit, we want to make more money. And there's just that disconnect. And I kind of think, how the hell does this investment industry take a subject which is so enthralling and engaging and turn the handle and produce sometimes the most turgid, boring stuff? You think, God, no wonder no one wants to open that letter.
Well, that's why you come in, Holly.
It
You come in,
is. This is where
bringing a
world
face to it, bringing some
domination.
animation and some theatre, and some just jargon-free communication.
I hope so, Peter. I mean, that is our aim, and that's what we're working hard to sort of build, to take the message out there to people and to grow. And we're doing well. So, fingers crossed, sort of we keep growing and keep helping more people to make better choices, and keep helping the industry to make better products and services. That's the goal.
Indeed. I mean, so you're independent. So when it comes to the trust issues, and you touched on ESG investing and being on the wane, you're doing the research. You're being entrusted with the research to provide knowledge for everybody, and people can then trust you with what you found to say, look, that's probably the best fund for me, or that's the best platform for me to go about investing. So that's the beauty of what you're doing.
It's really key, and it's key. That's the thing that I'm most keen to preserve is the trust that people have in me. And that's quite a position of responsibility. And I think the whole team that work with me, everyone's really bought into what we're doing and believes that, because the second that we lose that trust, the business just implodes. It really is key to everything we do. So it's probably the single biggest thing for me, whatever I'm doing, is that what I would say to my little sister? Is that what I would say to my kid's teacher? And telling it as it is, as uncomfortable as that can be sometimes, is just being really straight with people and not forgetting the importance of what you're talking to them about. And that trust is so important. And people bandy the word around a lot, don't they? But I think particularly corporates, they're very good at talking about it. But the problem is with trust is it's such an individual promise. I think it's very hard for corporates to maintain that across such an army of people. It's easier for groups like ours, where I'm the CEO at the end of the day. I call the shots, I hire people, and it is something I'm very passionate about.
Okay, I want to just encompass all of this now and talk about your personal investing. You talked about trust and the importance of it. Who do you entrust your money with? What's your strategy for investing your wealth, Holly?
I don't buy individual shares. because I like a good story too much, Peter. I'm terrible. I get greedy.
Going back to the nickel play
Oh,
from 20 years ago.
yeah, yeah, exactly. I've kind of, every time I buy shares, it just goes a bit horribly wrong. So I don't buy individual shares. I have about half of my money normally invested in a very low cost, passive, multi-asset fund. That's as boring as it gets. I typically hold something like the Vanguard Life Strategy range. I've got quite a long sort of time frame, so that will be as 100% equity. In the past is how I've managed my money. What I have done, it's such a weird environment at the moment, Peter, and I just think the outlook is so uncertain. My sense is, if you look at the impact that interest rates have had on consumers, it's very hard to see, and you can see people tightening their belts. You can see inflation starting to fall, and I think, you know, a recession, whether that's with a capital R or a small r, is probably on the cards. So the stock market to me looks alarming a little bit at the moment. Short-term UK bonds have been a very good deal, in my opinion. Now, this summer, I bought, and I've never bought bonds before because I've always found them really boring, like really too boring. And they have been boring for quite a long time. But this summer, I looked at sort of short-term UK treasuries, which are just short-term bonds from the UK government. So pretty safe. And you go, okay, these things mature in January 2025. So I know that's worth £1 on that date. I can buy it today for 92p. And I know the government's going to give me 100p back in about 15 months' time. So that to me was like, hang on, I know I'm going to go from 92 to 100 in that time frame. So suddenly being in the stock market didn't feel like a very good sort of bet to me. So unusually for me, I've got quite a lot in UK government bonds, and my stock market holdings are more, you know, I've got some in India and I've got some in Japan. I think it's going to be harder for people to find long-term returns than it has been for the last decade. I think we're going to have to dig a lot harder for the truffles than we have done for a long time. And that's obvious at the moment, right? Because if NSNI are offering people 6%, the stock market has to work bloody hard to persuade people to take a punt with their money in such an uncertain time, if that risk-free rate is sort of 6%. Now, that will change, right? But my portfolio looks very different. If you'd asked me about a year or 2 years ago, I was pretty much all in shares, and I was just riding that lovely bull market that went on forever. But I think we're moving into quite a different environment.
Thank you for that reply, Holly. I think you said it so wonderfully as well. The importance of looking at the markets and looking at the macro, and not just looking at the stock market in such a blinkered way. It's important. I think not a lot of investors do that often enough. It's like, I bought this stock, I've been told, I've listened to Buffett, I've listened to that person, and it says buy and hold forever. But occasionally you've got to look and reflect and change your mind and change your strategies according to the markets.
You do, but this is quite a unique time for me. And normally about in December every year, I normally get journalists from the main sort of papers go, and what are your picks for this year? And I sort of laugh, because for about a decade I've been going, sorry guys, I know it's not very newsworthy, but just look at what I said last year, you know, just a diversified bag of global shares. This year it is different. But, you know, as you say, the interest rate environment, we went from sleepwalking, didn't we, for sort of 10 or 15 years, and suddenly, bang, there's this massive wake-up call. So I have shifted, and yeah, you know, it's not doing my street cred any good, because I used to be in shares and they were cool and bonds were boring, but whisper. I've got quite a lot in bonds at the moment.
Brilliant. Now, Holly, thank you ever so much for being on this Investing Matters podcast with me. I've got one final question for you because I'm conscious I've had you on here for a little while. And I'm going to give you the power and the autonomy to do whatever you want with this power. And so my final question to you is, if you could change one aspect for the betterment of every individual on the planet we call Earth regarding investing or life, what would that be and why?
Oh, blimey. Everyone on Earth. I'll keep it to money, because that's the focus of what we're talking about today. I think it is the power of ownership. I would give people, at what age, I'm not sure, not at birth, probably at 18 or something, I would give them ownership of some sort of business. I would give them ownership or a slice of some business which they could relate to, which was regionally sort of near to them, or which felt tangible in some way. And I would say that they had to hold on to it for 10 years or something before they could sell it. But just that sort of sense of, here is something for your future, and you will have it. And by having this thing, you will understand about that really core concept that of what investing is at its heart, because that does get people interested. It does get them bought in. And I think the act of doing it for them is really important because it removes procrastination as well, Peter. So, it'd be some sort of thing that people would get age 18, which would give them a slice of the action of some company that meant something to them, and give them a little pocket of wealth for the future that was theirs, that meant something to them.
Fantastic reply. I love that reply, Holly. Thank you ever so much. Ladies and gents, that was entrepreneur, multiple award-winning founder and managing director of Boring Money, Holly Mackay. Holly, thank you ever so much. It's been an absolute privilege speaking to you today.
Thank you, Peter. I think I've enjoyed it. I've mostly enjoyed it. Very forensic. I feel like I've been on the couch with the sort of therapist. I'm going to go and lie down now.
Thank you ever so much, Holly. And I look forward to seeing you face to face as well. I'll come to one of your conferences at some point.
Brilliant. Thank you.
All right, take care. God bless you.
Thank you, Peter.
Thank you for taking the time to listen to Investing Matters. Be sure to check out the London South East website for free tools and info to research your next investment. You can also join in the conversation on our social media channels. And don't forget to subscribe to our YouTube channel for more content, including our CEO interviews. Catch you next time.